The Praetorian Fund believes that financial literacy is the key to a functional society. Sadly, most education systems are designed to create workers or gears for the machine and not truly empowered individuals who can make educated decisions. This module is going to introduce you to a new world of economic empowerment, so strap in and get ready to discover the freedom of financial literacy. Today we're going to explore the world of technical analysis. You might not be planning to trade, but understanding how this works can give you some really interesting insights into market behavior and the psychology behind it. Let's dive in. What is technical analysis? So, what exactly is technical analysis? In simple terms, it's a way to predict future price movements of assets like stocks by looking at historical market data. Unlike fundamental analysis, which digs into a company's financial health and business model, technical analysis focuses on price patterns and trends over time. Think of it like weather forecasting. Just as meteorologists use past weather data to predict future weather, analysts use past price data to forecast future price movements. Why do people use technical analysis? Understanding market sentiment. It helps to gauge how traders are feeling about a stock or the market in general. Identifying trends. By recognizing patterns, analysts can identify trends that indicate where prices might be headed. Making informed decisions. Even if you're not trading, understanding these patterns can help you make sense of the market's movements. Key concepts in technical analysis. Now let's break down a couple of fundamental concepts that are central to technical analysis. Support and resistance. Support. Imagine a floor. Support is like a floor that the price of a stock tends to bounce off. When the price drops to this level, it usually doesn't go much lower because buyers step in, seeing it as a good price to buy. Example, picture a ball bouncing on the floor. Each time it hits, it bounces back up. That floor is the support level. Resistance. Imagine a ceiling. Resistance is like a ceiling that the price of a stock hits and then falls back down from. When the price rises to this level, it usually doesn't go much higher because sellers step in, seeing it as a good price to sell. Example, think of that same ball hitting the ceiling. It can't go through and falls back down. This ceiling is the resistance level. How do we spot support and resistance? One fundamental method is by looking at historical prices. You check where the price has stopped and reversed in the past. For instance, a support example. If a stock repeatedly drops to $50 and then rises, $50 is a support level. Conversely, a resistance example. If a stock repeatedly rises to $100 and then falls, $100 is a resistance level. You can also draw trend lines. For resistance, connect the high points in a downward trend, and for support, connect the low points in an upward trend. Using moving averages helps too. These are lines that smooth out price data to help identify trends and can act as dynamic support and resistance levels. The simple moving average, or SMA, averages a set number of past prices, while the exponential moving average, or EMA, is similar but gives more weight to recent prices. Lastly, don't forget about psychological levels. Round numbers like $100 or $1,000 often act as support or resistance because they are significant to traders. Why should you care about technical analysis? Well, even if you're not looking to trade, technical analysis can offer a unique perspective on how markets operate. It shows how human psychology influences price movements, and helps explain why prices sometimes behave in seemingly irrational ways. Understanding market behavior gives you a window into the collective behavior of traders, while economic insights can be gleaned by recognizing trends and patterns, giving you a sense of broader economic conditions. It also helps you appreciate the complex interplay of factors that drive market movements. Let's take a real-life example with a stock from company XYZ. Over 6 months, XYZ stock price repeatedly drops to $50 and rises to $100. Support at $50 means buyers see $50 as a good deal and buy, pushing the price up. Resistance at $100 means sellers see $100 as a profitable price to sell, causing the price to drop. If XYZ's stock price suddenly breaks above $100, it might suggest new optimism about the company's future. Conversely, if it drops below $50, it could indicate a lot of selling pressure. Wrapping up, technical analysis is a fascinating way to understand market behavior through the lens of price patterns and trends. By exploring concepts like support and resistance, you can gain a deeper appreciation for how markets work and how traders make decisions. Even if you never plan to trade, this knowledge can enrich your understanding of the financial world. Thanks for joining me in exploring technical analysis. It's a captivating topic with a lot to offer.